Hello, my name's Dez, and you're interested in learning to trade stocks. And if you are willing to put on the mentee hat, I'm willing to put on the mentor hat. So let's get started. So the purpose of the 101 course is simply an introduction to stock trading. We're going to go baby steps. We're going to take little bitty steps, and I'm going to make the assumption that you don't know much, if anything, about trading. How's that sound? So first thing we're going to do is, what do I need to know before starting to trade? We're going to teach you all this. How much capital do I need to start trading? How much money can I make as a trader? What are my risks in trading? Should I trade part-time or full-time? These are all questions that you have now or will eventually have. We're just going to answer these for you throughout the series of these 101 courses. The 101 completion, you will be able to confidently decide whether to become a savvy, consistent, rational trader or not. By the end of the 101 course, you're going to be able to make a rational decision on if trading is something for your future or not. So pause the video. Here's our terms of use. Pause the video. Here's our disclaimer: educational purposes only. Objectives of the class. This is only one class of 5. This is a broad stroke introduction of what is the stock market, what is stock trading, what are the benefits and risks of trading. So this is me, Des Woodruff. You can pause the video. I am a professional trader. I've been doing this a long time. I've been trading over 30 years and been mentoring as mentoring traders such as yourself more than 2 decades. When we're traders first, mentors second. What is the stock market? Stock market is a large marketplace where people can buy and sell stocks. Stocks are small shares of a company. A company that is publicly owned means the public can buy little pieces of that business. Those are called shares. If the company does well, we can sell our stock for more than what we paid for it. So the idea, universal goal, is buy low, sell high. You've heard that before. As your mentor, our job is to buy great stocks and to buy those shares as low as possible and sell them as high as possible so we can make a profit. Now, well-known stock exchanges that are out there: New York Stock Exchange, it's in New York. Big companies are there. NASDAQ, more tech heavy. You've heard of that. And this CBOE is Chicago Board of Exchange, and that's in Chicago. And what is stock trading? Let's just get right into it, okay? Now, before we jump ahead, what do you need to know on those exchanges? This is a mentor moment. So on the New York Stock Exchange, the NASDAQ, COBE, do you need to know those? No. What do you need to know? That those are exchanges. What does that mean? The exchange simply means that's where the trading takes place. So we make a trade, it takes place at the exchange. So is there anything more you really need to know other than that? Not really. But at a high level, that's the long and short of it. But what is stock trading? So let's go over this. Stock trading, shorter term hold time. Stock trading, you can hold for a few days, a few weeks, a few months. You can hold for a few minutes if you want to, if you're day trading. It's speculative money. It's self-controlled and self-managed, okay? So if we're trading, we're taking ownership of this. We're taking control of this. And we're speculating on the market. We're speculating on buying low and selling high. We're speculating on this. But we have control over this. More controlled risk. So we can control the risk. There's steps that we can take to help minimize risk because we take an active part in the stock trading. More potential reward. It is potentially more rewarding to be actively trading. The more trades you make, the more money you make is the concept. If you are undereducated, you haven't taken the right steps The more you trade, the more you'll lose in trading. Let's talk about investing. Trading is very active, and it's usually in shorter terms, okay, time frame. Investing is usually a longer time frame, usually years. And retirement, this is retirement money, long-term wealth building. That's what this is. Think of a 401k, think of your IRA, think of long-term holds. Also, investment advisor strategy. So your investment advisor, if you have one, they are very much about buy and hold. We like to say buy and hope. Hope that it keeps going higher. So lower risk potentially. Is there lower risk with buy and hold? Statistically, that has played out in history to be true. Is there more risk in actively trading? Historically, yes, because most people are underdeveloped, undertrained, undereducated. They did not invest in the specialized skills to do it. But can you make more money trading? Potentially, yes. Okay, so there it is. Lower reward potentially. So is there lower reward with long-term holding? Potentially, but there's an argument both ways, okay? Now, what we're focusing on is the trading aspect. Anybody can buy and hold. You're doing that already in your 401ks, and you're doing that already in your IRA, okay? We're not talking about that. We're talking about taking hold of your own capital and making your own trading investments. So types of trading timeframes. So you have down there at the bottom, the long-term investment. That's buy and hold, buy and hope. That's not what we're talking about. And then there's something called position trading. Position trading means you're only making your decisions to get in and out of a trade every few months or so. Think monthly on your management of buy and sell monthly. Then there's something called swing trading. A lot of people do this. This is a favorite. This is what a lot of traders do. And this is, think of days. It goes from days trading in a couple days to 14 days, 20 days, however many days. Think swing trading is day trading. You're looking for swings. Position trading, you're holding a position for a longer term of time. And then you have day trading. Day trading just means you're in and out within the same day. That can be a 1 minute chart, a 1 hour chart, a 5 minute chart, a 15 minute chart. It doesn't matter what time frame. It just means you buy today and you sell today. That's day trading. Then there's something called scalping, and you're in and out within seconds. Think seconds. So scalping seconds, day trading minutes, swing trading days, position trading weeks, if not months. Okay, that's the long and short of it. Here's a diagram if you look here. So you have day trading is intraday. It's called intraday. So you're in today and you're out before the close of the market session. So the markets are open at a certain time during the day and closed at a certain time of the day. They're not open 24/7. Swing trading is days and sometimes weeks. Okay, days and weeks. You buy, hold for days and or weeks and sell. Position trading, positional trading, you buy and hold within months. Hope that's helpful. However, most traders are swing trading, and on the daily side, and most traders are day trading. If you become actively trading, if you become an active trader, is what we're talking about here. Swing trading, day trading, very, very common. So what to trade? Stocks and mutual funds are the big popular ones, okay? Now we call it stock trading, but we can trade a lot of different things here. What you're learning, the skill sets you're learning here is where you can trade a lot of different things. A stock is on an individual company. A mutual fund is a basket of stocks. It's a bunch of stocks in one basket called mutual fund. There's something called an exchange traded fund, ETFs. The mutual fund and the exchange traded fund are very much the same type of product. It's still a basket of stocks. The mutual funds, the brokers put together, the exchange traded funds, the exchanges. Remember we talked about the exchanges, New York Stock Exchange, the NASDAQ, CBOE, the American Exchange, all of the different exchanges. They have their own products too. They don't call them mutual funds. They call them ETFs. Just a different name, same product, same concept. It's a basket full of stocks. both of those. Individual stocks, basket full of stocks. Options. Options is something outside the scope of what we're talking about, far more advanced. They're basically derivatives of the stock market. So you could do an option on a stock. We are not going to go there. Futures, same thing. It's outside the scope of what we're talking about, but you can trade futures. Futures on stocks, futures on commodities, futures on anything, just like options. Options on commodities, on stocks, on anything. These are highly leveraged, much more complex, and only for professional traders. Currency and Forex, usually governments trade the Forex, and you get a lot of speculative day traders also doing Forex or currency trading. Currency and Forex can be traded too, and cryptocurrencies. Now listen, anything and everything that we teach allows you to basically trade anything and everything that has a chart. So that's the benefit of going through what it is that we are teaching. So how to begin trading? There's 1 of 3 steps. Number 1, find the best stocks to trade. That's our number 1 goal. Let's find the best stocks to trade. So how do we do this? Is through something called fundamental analysis. Fundamental analysis, what does that mean? Research the best companies. We'll get into a lot of these questions that you have more, like what is a broker? What is an exchange? We talked about the exchange a little bit, but what is fundamental analysis? We'll get into this much deeper as you progress through the 101s, but we're taking you by the hand here. We're baby stepping, and you're going to hear these terminologies more and more as we go. Be patient and know that you will learn this, okay? You will learn all of this. But fundamental analysis just means the numbers of the business. We analyze and research the company and by how strong the P&L is, how strong profits are, how strong their earnings are. We look at a lot of different things. That's called fundamental analysis. So we pick our companies fundamentally, meaning how do we find the best, strongest companies? We look at the fundamentals. That's what we do here. So step number 1 is we need to find the best stocks to trade. How are we going to do that? Fundamental analysis. Step number 2, we have to find the best stocks to trade. Number 1. Step number 2 is find the best time to buy. So let's find the best stocks. Okay, got it. Fundamental analysis. Let's find the best time to buy. How are we going to do that? Technical analysis. Here's the other big term. We use the big term fundamental analysis. That just means looking at the numbers of the company and how strong is the company's business, okay? Profitability. The second big term you just heard is technical analysis. What is that? That is the chart. Do you see this picture over here? This is a chart. That is the chart of price. So when the price goes higher, you can see the price going higher here. Price goes lower, price goes lower. It goes from left to right, and this thing keeps making patterns. So this is going to keep tracking higher, or it could start tracking lower. The analysis of this price action, of the price itself, is called technical analysis. And there's a lot of tools we use to help know or have a good idea what direction the stock might go next. So this is knowing when to enter the trade. So what are the 2 things we just did? Okay, let's baby step this. We need to find the best stocks. Perfect. How are we going to do that? Through fundamental analysis. We're going to analyze all the stocks that we can find, and bam, we find the best stocks to trade. Step number 2. We need to know when to get into that trade. When do we want to buy that stock? That's called technical analysis. That tells us when we need to enter the trade. Okay, next. Here's our last step. We have step 1, buy the best stock. Step 2, the best time to get into it. Step 3, we got to buy the stock. We have to buy it. So we already know the best stock. We know when to get into the stock. Now we have to buy the stock. How do we do this? We create an order with a broker. Remember how I just brought up the word broker? We have the exchange and then the broker. The broker is the online resource we use that we go into and we place our trade. We have an account with the broker. The broker allows us to make the trade. We just do an easy order form. We fill that out and say we want to buy XYZ, and we're willing to put this much money into it. It is a fairly easy process, and that is how we do. That's how we begin trading. How do we begin trading? We find the best stocks, we figure out when to get into them, and we purchase the stock. What are the benefits of trading? Benefits of trading is number one, everybody's focus is on growing wealth, growing capital, making money. Number two, you are in control of managing your own assets. You are setting your own goals, and you are contributing to your life's objectives. You are, nobody else. You are taking control of that. You continue to learn new skills and master new challenges. Trading brings some amazing benefits. You can build supplemental income and or build wealth over time. So trading can be added as supplemental to the job that you have. You have the job now. Do this on the side. Swing trading is a great way of doing it. You can put your trades on at night after you get home from work, or before you leave for work, you put your trades on in the morning. Swing trading is perfect for people that want to keep their job. So 10 reasons people want to trade. We already talked about wealth accumulation, increasing their overall wealth. Emergency fund, they need money for emergencies. Debt repayment, it's a good way of making money to repay debts. And lifestyle improvements, which is a nice perk. Retirement savings, building up the retirement, increasing the retirement capital that you have so you have more when it's time to retire. Educational expenses, buying a home, starting a business, healthcare costs, philanthropy, if you're giving, top 10, right there they are. If you got a giving heart, these are all the benefits. So let's talk about the risks of trading. We just talked about the benefits of trading. We have to be balanced. What are the risks of trading? You're gonna always lose some of your money. You're always gonna lose some of your money. We just want to be making more than what we're losing, okay? Make sure you understand that. Losing or in trading is a reality. It comes with making money. We want to be making more than we're losing. But if we trade recklessly, we can lose all of our money. If we trade very recklessly, we can lose even more than our initial investment. So just know that trading involves risk. We can lose all of our capital that we put at risk, that we trade. And if we're using leverage as far as the options and futures, remember I was talking about the options, futures, and currencies a little while ago. If you were to trade inside those instruments, you could literally lose more than what your initial investment was. So that's the reality behind trading. So there's market risk. There's big ups and downs, volatility, news events. You have bear markets. You heard of market corrections. There's big things that happen. Also risk in trading, and there's personal risk of being wrong, mentally, emotionally, and then trading like a gambler, very real issue that traders have. That is not us. We need to be trading like businessmen and businesswomen, not gamblers. Huge difference, okay? Trading as a business versus gambling. Business. If you're a business, you're trading with the right educational foundation. Just like if you're going to be a heart surgeon, you need to have the right education in place before you do that. If you're going to be a pilot, the right education to do that. Make sure you solidify the right education before you start trading in the markets, or you will become a gambler, okay? Trading mentor and coach, that is by far the fastest, most expedited, efficient, effective way to get trading. It's not books, because you could buy 10 books. All books will have something different. You can watch all the YouTube videos out there. Everyone has something different. The idea is finding a coach mentor, and that's what we do. We feel like we do that very well. You got to make sure the coach or mentor, or whoever you use, are first traders and educators second. Make sure that they have been in the markets for some time and willing to train. Very important that you do that. Trading with the odds in your favor. Trading with the business is trading with the odds in your favor. We have to have that trading following logical, rational trade plan. We trade with a business plan. We run business with a business plan. We trade with a trading plan. So we methodically go after our trading responsibly, and we do it treating it like a business and not gambling. So trading using a trade log, your trade log that will measure your progress. So things that get measured get done. The measurement is how we increase the trajectory of success. What we want to do is measure that, find weaknesses, identify weaknesses, and bring corrective measures to those. How do we do that? By measuring. How do we measure? Through our trade log. So our students get this trade log that does all that for us. It makes it really easy and simple. So let's talk about a gambler, guys. Do not be this. Do not be this. If you're wearing the mentee hat, I'm wearing the mentor hat. This is where we need to start framing you to be the right type of trader. Trading for an adrenaline or an endorphin rush. A lot of guys are this way. That's not going to be us. We're not going to be swinging for the fences, hoping for the best, and looking for that next, adrenaline dump. Okay. No formal training. They will say we are not going to have any sort of collective, coherent foundation of trading put in place. They are not going to get the specialized knowledge. They are going to watch this video, read this book, and they're going to try to piece it all together themselves. They're not going to have a coach, and if they do get mentoring or coach, they find somebody who's an educator first and a trader second. It can't be that way. It needs to be a full. They need to be full-fledged traders, expert traders. Okay, so no plan or consistent approach. They're freestyling it. They're trying this and that, and that's a gambler. Pure emotion-driven trading decisions. Fear and greed is the killer. You will learn that as we go forward here. That's what separates business and gamblers. So live in hope that it will turn out eventually. We don't live in hope, okay? That's not us. So let's talk about the objectives of the class 1 of 5, broad stroke introduction of what is the stock market, what is stock trading, and what are the benefits and risks of trading. I think we checked all those boxes. Feel free to watch the video again. I got a couple other things I want to share with you, guys. This is the 101 course. You're in here now, and next is the 201 course, the 301 mentorship, 401 master trader. But your decision to research stock trading, you've already done that. You would, if you hadn't, you wouldn't be where you're at now. Where are you right now? You're in the 101 course. So you're on the right path. You're saying, let's get mentored. We are mentoring you. We're taking on the expense right out of the gates to say, we're willing to do this for you. And you found the right mentors with many, many, many years of active trading experience. We're traders first, mentors second. So you're here right now. So eventually you're going to get to the 201 courses, just like the 101s. This is what trading is all about. The 201s is how to trade, exactly step by step how to do that. To become a trader, the 301. This is the cat's meow where everyone's driving towards. And then to master your trading, you do the 401. So that is the path you're on right now. We have several more classes to get through in the 101s. We are going to get a check mark on this eventually. So that is next. So what is next? Let's talk about that. Class 2 of 5, how do I analyze stocks? How do I analyze stocks? Remember we were talking about fundamental analysis? How do we know what stocks to trade and how to find them? So that's it. We'll see you in the next class.